Welcome back to the Florida CME Group here in Chicago, Monday, April 9th. I'm the Killer. Let's get into the zone, folks. A lot to talk about today. Here we go, CMZ time. So we're seeing that Friday job. It was truly unenjoyment number. We talked about this on the CMZ a lot. We saw about an 80,000 less jobs as anticipated, 120,000 number. Not sure how many of you folks were trading. I was not. I was on the beach, but I was positioned into the market, and luckily I was positioned the right way because I've been talking about buying these treasuries. This 2.28, 10% backing up the truck. Hopped on CNBC Fast Money 2 weeks ago. Caught a lot of heat. The 10-year went up to 2.37, but it's come back, and today we're at 2.03. So it's kind of nice to come back from a week off to a nice position waiting for me here in the office here. So no doubt about it, we are seeing this equity move down, and it goes back to Ben Bernanke, folks, to QE3, the ebb and flow of QE3. Is it coming? Is it not? But right now we're seeing the S&P's on about 15, 18 handles. So the volume, the lack of volume, whatever you want to call it on Friday, we are seeing follow through. They're bidding the Treasury curve complex up all the way. We're seeing new highs in the 30-year, and right now that 10-year, it feels imminent as well as inevitable that they want to go back into that 1.9%. So we'll see that. They're also buying gold today, but we are seeing a disparity here on the CMZ between the silver and gold, and I talked about that a little bit on my Twitter account. And if you're not following me, you should. It's at the Killer. But we're talking about this SLV. That's a way to play the silver contract via ETF or the GLD. We're seeing silver down, gold up. For the folks who want to play the gold play, which are believing that central banks will continue to buy this, and as we do see a potential pullback here as the EU situation heats up, we only have, folks, so many safe haven trades. We have the US dollar with the Treasury complex. You're seeing that German Bund lead a little bit further down in yield. But we're going to keep our eye on the Spanish yields this week as well as the Italian yields. We got a lot of moving parts, but we're seeing a lot of Fed speak this week. We're going to see some inflation numbers. But at the end of the day, folks, until inflation, and we know what real inflation is. That's going, the pain at the pump, and it's food prices. We're seeing those skyrocket. But the Fed doesn't consider that true inflation. So until the Fed actually sees inflation creep into the wages, they're not going to move these rates. And I've been talking about this, and I think I finally got some legs to stand on here again that I've called to buy treasuries. So right now, we are not seeing the Fed move the balance sheet. They got a big meeting coming up in this month of April, so we'll see if that twist on the twist, which I dubbed Operation Pretzel, is coming. I don't see how it doesn't come, folks. I'm a big believer that we need rates to move up to spur economic growth. However, the Fed's only policy, the only tool left in the toolbox is this rhetoric. The new communication tool is not truly a tool. It's just telling everyone what's going to happen. And the Fed is really running the risk of losing credibility. If they're saying they're going to keep rates to 2014 and they for some reason move rates, well then their whole barometer, their whole sensitivity to economic data is off, and that will lose a lot of credibility moving forward. So right now we are in a historic time, folks. We are seeing more data come in and more people view in on this. Some people are talking about this S&P right now trading about 1375, going all the way back down to 1300. I don't know if I see that big of a correction. However, there's a vacuum on the chart, but a lot to consider here. Be back tomorrow. Maybe we'll grab the Wolfman one of these days from the Florida CME Group. I am the Killer, and if you can't remember this, you can't remember anything. Be the hammer, not the nail.